Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of March, 2023, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of March. And across all these three major pairs, they were basically neutral and consolidating for the most part of last week. And this week, the only key news coming up is from the US with the non-farm payroll report on Friday. So the euro has managed to hold on and finding support from the daily 200 EMA, as well as the cable also finding some support just below 120 round figure. And the Aussie finding strong support from the 67 round figure, trying to hold on for another week. And all this after weakness in the all these three pairs in the recent weeks, especially for the month of February. Okay, let's begin with Euro. And let's expand this, and since it's the daily time frame, and from the start of February, it's already fallen from just peaking over 1.10, 110, and dip all the way down to the daily 200 EMA, just above the 105. And found support right from the start of the week after falling hard the previous week, and attempted to climb back up into resistance zone on Wednesday at the 107, but then retrace back and then consolidate for the week, and closing just above the 106 area. So for the euro, they're probably waiting for the ECB rate decision and a meeting next week, the week after, not next week, the week after. And the only exposure to major news this coming week is from the non-farm payroll report. So it's trying to avoid 105. 105 is a key round figure support here, and also the last swing low from early January. And this is a critical area. If 105 breaks, then it's going to try to target the 78.6 pip retracement area. And just below the 105 is this swing high, where it did, that's the retest here in early January. So this is definitely a critical area of support. And on a weekly time frame, it managed to find support and just to retest the retest the previous week's fall, and then did close slightly lower for the week. Okay, so this week another critical week to watch the US dollar and the euro. So the key news from last week was the ISM PMIs. On Wednesday was the manufacturing for the US, which was neutral, and it was as expected. and below 50. So the euro did climb up on that. And although the Friday's ISM services figure for the US was better than expected at 55 and it's above 50, it did manage to stage a late comeback and recovery on various conflicting reports from or comments from the Federal Reserve presidents from various states. So it's it depends on who you want to listen to, and the market took some relief from comments from a certain Fed president. And initially, we go to the 1 hour time frame. Initially, the news on the ISM services was better than expected, and this drove the euro down, but after that managed to pick up and recover and close back up above the day's high. So it's just biding its time till next week with the US dollar movement, and then the following week with the ECB rate decision, and after that the following week, 2 weeks later, there's the FOMC's turn. So this will be definitely a critical area of support, and at the moment it's trying to hang on. Right, so we'll see whether it's similar to the US dollar index with inverse relationship with a neutral and neutral stance for the week, and without any breakout higher. Okay, let's switch over. And here's the US dollar index, the DXY, where, as you can see, it's all very tightly bunched for the week with a very neutral stance and not able to break out higher or break down lower, and stuck between the 105 resistance, critical resistance above that, and below that support from the daily 55 EMA, where it did dip to test it on Wednesday. It dipped to just below the 104. Okay, and a major support is still very safe below at the 103, and right at the 62, right at the 50-pip retracement area at 103. So not very decisive yet, and still holding back on the breakout. And 105 is the critical one that needs to break out higher above, and also the swing high, the recent swing high in January. It needs to break above these regions here. So this zone here needs to break out higher if it's going to recover further. And the FOMC is only going to meet in a couple more weeks. So next week there's only non-farm payroll news, and also the RBA and the BOJ announcing their rates and monetary policies. But the US dollar breaks down lower, it needs to break down below the 55 EMA and the 62 FIB resistance area, and coming down to test the 103 back at the 50 FIB retracement. But for now, it's still just consolidating and narrowing into a triangle. On the weekly time frame, it's a very narrow range and also within the previous week's range. So forming a harami, just waiting for a breakout now. So we could just draw this consolidation trend line here. Trend line. So narrowing into a symmetrical triangle. All right, we'll see if next week is able to break out higher, and it's also settling around the 786 and the daily 200 EMA. So fairly tight grouping centered around the daily 200 EMA. Okay, so let's move back to the other major pairs. Okay, let's move on to the cable. And the cable has been trying to stay close to this critical 120 zone. Has been trying to recover and climb back up every time it dips lower to the 119 and avoiding 118, 119 area, 119.20 was likely the lowest, I guess. Let's take a look for last week was 119.25. And from the start of the week, it was down to, yes, 119.22. So it has been avoiding the 119 area and trying to fight back to climb back up above 120. It did climb up higher on Tuesday to test the daily 200 EMA and the 21 FIB area. That's the intermediate resistance here before falling all the way back on Thursday. And then on Friday, fighting back up again. So likewise, it's also as with the euro, it's trying to hold on and not drop yet, not drop further yet. But it is also trending in a descending triangle here. Okay, let's switch to the weekly time frame, and yes, it managed to retest the highs of the previous week and recover back and close bullish. So key intermediate resistance is at the daily 200 here at the 21 fib. And below that, it has not tested the intermediate support at the 38 fib retracement yet. That's at the 118.65 together with this swing low area. So it has been avoiding it and trying to climb up and recover. And below that, if the 38 fib is broken, then it's likely coming down to the 50 fib retracement. And that's at 116.85. Okay, so no major news from the UK. It's just also exposed to the non-farm payroll report on Friday from the US. Okay, let's move on to the Aussie dollar. And Aussie dollar has been tracking a very tight range for the week. And it's stayed in a very narrow 70-80 pips range. Yes. And on this daily time frame, it's looking like a bearish flag here. Let's move this away. Let's move this out. And the intermediate resistance is now combined with the 255 EMAs coming down. Major support is just above that at 69. Okay, so this is looking like a bearish flag for now. So does not bode well for the Aussie dollar. And that's a critical support zone just below 67 here. And that's going to be at around 66.50 area. Just about halfway coming down to 66 and the 62 fib retracement area. And this week, there's also the RBA's turn to announce their rate hike, and that's another 0.25% increase, expected to bring it up to 3.6%. And the previous weeks, last week, the CPI and the GDP figures were lower than expected, so that was surprising. So we'll see what impact the rate hike is going to be and whether it's going to price that in already. And then on Friday, exposed to the non-farm payroll report as well. Okay, so fairly neutral week last week, and for some quite a tight trading range, and we'll see whether this week is able to break out one way or the other, or whether we'll have to wait for another week until the ECB's turn, and then the following week later will be the Bank of England and the FOMC. Okay, so the only critical one to look out for with high volatility will be the non-farm payroll report on Friday. So meanwhile, have a safe week and a good trading week, and cheers for now.